So could you start off by explaining to us what a balance sheet is?
Yeah. So as its name suggests, a balance sheet has to balance. If it doesn't balance, you don't have a balance sheet.
Hey everyone, and welcome back to another edition of Bookkeeping Legends, where we talk all about bookkeeping and accounting. And I'm joined here with Calvin Lee, the instructor of the Bookkeeping Legends course. And in today's topic, we are going to help others out with absolutely zero experience in accounting by giving you a little bit of a crash course in bookkeeping and accounting. So Calvin, you're obviously a very experienced instructor, and you've taught accounting and bookkeeping at the college level. Can you first start off by telling us a little about the general things that anyone that was zero experience in bookkeeping and accounting would need to learn about?
Absolutely. Well, first of all, you need to know your debits and your credits. So it's kind of like knowing 1 + 1 = 2. So basically, both sides of the equation have to equal, and then so you have to know like which side to post your particular type of transaction. So, for example, if you want to post, your customer paying you money, so you would have to like debit, for example, $100 to cash, and then you would have to credit $100 to the revenue. So that's one of the most basic fundamentals, is you have to know your debits and your credits. Just ask any bookkeeper. That's the first thing they'll tell you. You have to know that.
That's awesome. Yeah, debits and credits are the ones that, it's basically the fundamental building blocks of accounting. And, if you don't know it, then you're going to struggle in accounting.
It's kind of like learning your ABCs. Like ABCs by themselves don't make any sense.
Right.
But once you put them into words and then into sentences, those ABCs, everybody has to know them. And then that's how you build the language. Similar to accounting, debits and your credits, that's kind of like your ABCs. And then you build that from there. And then you start to put your transactions in the right place, kind of like building words from letters, from ABC. And then you start building more to it. So from words, you build sentences. So it's kind of like you build your, one transaction into like, wow, how much profit am I making? This is how you start. You know your debits and your credits, then you know how to record them, and then you know how to report them in your profit and loss statement, for example.
That's amazing. So thank you for that. Now, another basic fundamental bookkeeping and accounting fundamental is, can you tell us what is the difference between cash basis accounting and accrual basis accounting?
Absolutely. So let's say, for example, you have to pay your lawyers for whatever fee, like, for example, starting at your corporation or other legal matters. So let's say for the year 2020, you have to pay your lawyer $1,500, okay? And then so the lawyer says, okay, for your 2020 bill, you're going to have to pay me $1,500, but you don't have to pay me until January 15th of 2021. Okay, so what do? Do you record that as an expense when you actually pay him in 2021? Or do you record it in 2020 because it's an expense related to 2020? And that's the difference between cash and accrual basis comes in, because that particular expense is for the year 2020. And the revenue that you made in 2020 is recorded in 2020. But then the expenses that you also incurred for 2020 should go against that. Otherwise, there's going to be a mismatch, right? So even though you're paying your lawyer $1,500 for 2020 in January of 2021, you want to record it in the same year. So you accrue it in December. You put the expense against your revenue in 2020. So you know exactly, how much money did I make? That's the question all bookkeepers and the owners of the business want to know. Like, how much money did I make in 2020? If you don't record your $1,500 of lawyer fees in 2020, it's like, wow, I made so much money in 2020. But then you forgot to record that expense that you had to pay your lawyers for 2020, right? So let's say you made $3,000 in revenue, okay? Really simple, $3,000. You'll be like, wow, I made $3,000 in 2020. This is such a great year. But you forgot to account for that $1,500 you paid to your lawyer, right? So that's why you have to put the 3,000 and the $15 again, $1,500. Then you say, oh, I made $1,500 in 2020 because half of it went to my lawyer, right? So whereas if you record it on a cash basis, you'll overstate your 2020 income. You'll think, wow, I made $3,000 of profit when you only made $1,500 of profit. So that's the difference between cash basis and accrual basis.
That's awesome. Super, super helpful demonstration, Calvin, for that. Now I'd like to move on to the various building blocks of a financial statement. So could you start off by explaining to us what a balance sheet is?
Yeah. So as its name suggests, a balance sheet has to balance. If it doesn't balance, you don't have a balance sheet. So in its most simple form, a balance sheet means you have to have your different assets, which is like cash, or your capital assets, which is like your desks or your computers, and your inventory if you sell widgets, for example. And then on the other side, you also have liabilities, such as you took out a mortgage for your building, or you have a line of credit, or you have a credit card that's owing. So that's called liabilities. And then there's also a third section, which is not looked at as much because it doesn't change very much, called the owner's equity. So this is basically if you own shares in the company, or you distribute dividends to the owner, etc. So very simply, your balance sheet consists of assets, liabilities, and owner's equity. And then so the most important equation in accounting, this must always be true, is that assets equal your liabilities plus your equity. And we get into a lot more detail about this in the course, so don't worry if you don't totally understand what I'm talking about. But then you're looking at how much assets you have, how much liabilities, and how much equity that you have. And then based on that, you're able to do some financial analysis on like how well your company's doing. So for example, if your balance sheet, you have like $2,000 in assets and only $1,000 in liabilities, then that shows you, wow, I have twice as much assets than I have for liabilities. So you get to make a lot of interesting analysis like that based on how well your company's doing. Whereas if you say your liabilities is like 5,000 and your assets is only like 500, then your company might be in a little bit of trouble because you have so much liability. Are you able to pay for all of that using the assets that you have? And which is probably not very much. So essentially that's what a balance sheet does. It shows you how much assets and liabilities and equity you have.
That's awesome. Thank you. That's a very, very detailed and thorough explanation of what a balance sheet is. Now let's move on to the next one, the income statement.
Every single bookkeeper and the owner of the business wants to know, how much money am I making? Am I making money? Am I losing money? Those are the big questions in every business, right? So the income statement basically, in its most simple form, shows you how much revenue you made and how much expense you have. And the net of those two is your net income. And obviously you want your net income to be positive, otherwise you have a net loss. So the income statement is perhaps the most looked at report that business owners look at. How much money am I making? Am I making enough money? So revenue minus expenses. So back to the example we had earlier, where you made $3,000 of revenue, but you had $1,500 of legal expenses. So your net income is $1,500. So that is what the income statement is telling you. It's like, how much money are you making versus the expense that you have.
Very, very good. And this is the one that is probably the easiest and the most confusing at the same time, because you can have a lot of revenues, but if you don't have cash, your business is toast. So the last one I'd like to talk about today is the cash flow statement.
Absolutely. So having a lot of net income might not necessarily mean a lot, because say, for example, you have a lot of revenue but then you're not collecting cash, it doesn't matter if you have $1 million in revenue if you're not collecting any cash. Without cash, no business will survive, because that is how you pay your bills, that is how you pay your employees, that is how you pay the bank on your mortgage, right? So the cash flow statement basically shows you the cash coming in and the cash going out. So even though if you have like $1,000 of revenue, how much cash did you actually get? If you only got like $200 and your expenses is like $800, then even though like you have more revenue, 1,000 revenue, but you have only 800 expense, looks like I'm fine, right? But no, you only got $200 of cash, right? And $200 in cash does not help you pay your $800 in expenses, for example. So that's why not only you have to look at your profit and loss statement, also known as income statement, you also have to look at your cash flow. Very, very important for any business.
Yes, absolutely. And that's why they always say that cash is king. And that's something that I've learned that I would never, ever forget. So thank you so much for sharing that information with us today, Calvin. Can you just, before we end off, can you just, briefly tell our students or potential students that are interested in learning about bookkeeping and accounting, what they would expect to learn in your course?
Mm-hmm. Absolutely. So we take you from the very, very beginning. You have to learn what debits and credits are. So that's the building, starting with the building blocks. And then I'll explain, obviously, in more detail what a balance sheet, income statement, and the cash flow statement, what those things are and how you can use them. And then in this course, we're going to be as practical as possible. So I'm going to show you how to record the most common types of transactions. So when revenue comes in, what do I do with that? When I get a bill from my phone company or internet company, what do I do with that? How do I record that? And what am I going to do? When I have to pay some, for example, taxes, like how does that work? So we're going to go through step by step how to record the different transactions, and then also how to create reports that actually make sense for your business owner or for example the government. And so we'll talk about the different reports that you would generate, and then we'll take it step by step, one step at a time. So this is going to be quite an interesting journey.
Awesome. That's amazing. And this course was designed to be as practical as possible, because you will be working with actual real live entrepreneurs, business owners that are expecting you to know how to basically understand these concepts and also how to apply it to their particular business. So theory in general is good, but this course is designed for practical purposes. Would you say that's a fair statement, Calvin?
Absolutely. I'm going to try to avoid as much theory as possible so that you can get straight to knowing what you need to know, as well as how to do bookkeeping starting from day one. So the most important things you have to learn may be like accounts receivable, accounts payable, like your expenses. So we're going to be jumping right in so that you can start working as soon as possible. I know most of the people watching this video, very busy people, not a lot of time. So we're not going to go into a lot of theory. We're going to be as practical as possible so that you can start looking for your first client, and then you can start your bookkeeping business as soon as possible.
Fantastic. Thank you so much, Calvin, for all that valuable information. Once again, if you guys are interested in the Bookkeeping Legends course taught by Calvin Lee and myself, please make sure you check out the description below. And we really look forward to seeing you guys in our next video. So until then, see you guys next time.
Bye-bye.
Bye-bye.